Hello, and welcome to Wealth Management Insights. I'm Monica Guerra, Head of U.S. Policy for Morgan Stanley Wealth Management, and I'm recording this audiocast after the market close on Wednesday, April 9th. Tariff news has resulted in extreme market volatility and caused investors to question the length and depth of current policies and their impact to economic and investment performance. Before I dive into consideration of the trade headlines, note that President Trump's announced tariff policies are highly fluid and could change by the time you listen to this audiocast. Regardless, while the directionality of tariffs may shift, we must come to terms with the disruptive nature of tariffs. So to start, what happened? On April 2nd, President Trump announced new tariffs, including a 10% across-the-board levy, with additional reciprocal tariffs imposed based on a country's current tariff rate on the U.S. and other non-tariff trade barriers, as well as trade balances. The scope of announced reciprocal tariffs is far-reaching. Reciprocal rates include 20% on the European Union, 46% on Vietnam, 26% on India, 24% on Japan, and 25% on South Korea, as well as 10% on the UK. The initially announced tariff rate on China was 54%, a combination of a 34% reciprocal tariff and the 20% tariff already imposed on China. Today, the China tariff rates stand at around 125%, but could experience further changes. In response, China raised its tariff rates on U.S. imports to 84%. While individual country-level tariff rates are significantly higher than anticipated, the announcement did not include new incremental tariffs on Canada or Mexico, which we view as a modest positive. The administration has provided conflicting messages on the permanence of tariffs, with a recent 90-day pause for countries that had not retaliated to the initial tariff proposals. That said, over 70 trade partners have already approached the U.S. to negotiate lower tariff rates. This dynamic landscape leaves open the possibility both for reductions and increases to tariffs in response to specific negotiations. If tariff policy is ultimately durable, we anticipate it having notable economic effects on the U.S., particularly on inflation and growth. Tariffs are likely to introduce higher inflation risk. Morgan Stanley & Co. economists estimate that core PCE inflation will rise to 3.9% by year-end, almost a full percentage point higher than prior estimates. Like our expectations for inflation, restrictive tariff policy is likely to place a drag on GDP growth. Morgan Stanley & Co. also estimates growth in real GDP of 0.8% this year and 0.7% for next. That is down from 1.5% and 1.2% previously. These forecasts do not consider other policy dynamics, such as tax extensions or the recent pause. Conversely, if we experience capitulation around tariffs, markets and the economy may deliver positive results. Importantly, the latest round of tariffs is estimated to raise between $1.4 trillion and $1.8 trillion in U.S. revenue over 10 years. However, changes to the known tariff framework could result in higher or lower revenues. Going forward, we expect markets and investors to remain cautious as potential sector and industry level impacts become clearer in the coming days. Sectors that could be most impacted include technology, materials, energy, and industrials, which have foreign revenue exposures as high as 57%, rendering them particularly susceptible to tariffs. Tariff news and policy making have been swift and dynamic. We expect headlines to continue to evolve. Notable policy changes are likely to continue to drive investor uncertainty, and market volatility could remain elevated as the White House continues to clarify its trade strategy. Given this dynamic policy environment and the likelihood of continued market volatility, stay tuned for further commentary and stay connected to your financial advisor. For a more in-depth discussion of the economic and market impacts of evolving trade policy as of Wednesday, April 9th, check out our latest U.S. Policy Pulse Report, Tariffs in Action. As always, thank you for listening. For further information pertaining to U.S. public policy, please ask your Morgan Stanley financial advisor for copies of our latest reports.